Shifting focus to the West African market. Now, trade war recession fears are weighing on the oil market. Nigeria generates roughly 90% of its foreign exchange earnings from oil exports. And as crude prices slip amidst it all, the West African nation is in for a major revenue hit. Abdulazeez Kuranga, Standard Bank's regional economist for West Africa, joins us with his analysis of the potential impact of Trump's tariffs on the Nigerian economy. Abdulazeez, thanks so much for your time this afternoon. And let's start there. What is the impact of these tariffs? What impact will they have on the economy? Have we started seeing big financial institutions and perhaps the central bank starting to shift forecasts when it comes to growth?
So in terms of impact of these tariffs on the Nigerian economy, if you look at it on a standalone basis, you don't tend to see much of an impact. However, the impact is coming from secondary effects of these tariffs. So from a standalone perspective, we've seen that the United States is only contributing about 7%. 7% of Nigeria's total exports is to the United States. And this total exports to the United States as a percentage of Nigeria's GDP is about 1.7%, of which oil exports alone is contributing about 1.5%, with the non-oil exports contributing 0.3% of GDP. Currently, we understand that crude oil exports are currently excluded from these tariffs, so which will be implying that the impact of these tariffs will only be applicable to the remaining 0.3% of Nigeria's GDP, which are essentially the non-oil exports. So if that is the case, from a standalone perspective, the impact of this tariff directly on Nigeria is limited. However, we've seen some negative sentiments as a result of these tariffs, leading to an expected slowdown in global growth, especially in China and other economies. And as a result of that, we are seeing that oil prices are now reducing. I'm currently at about $65 per barrel, which is significantly below the government's budget of about $75 per barrel. So this is part of the factors, or this is part of the issues where we see Nigeria to be impacted. Because if the oil exports is accounting for about 90% of Nigeria exports, also accounting for about 45% of Nigeria's government revenue, then it is meaning that lower prices will be leading to some dollar shortages or expected dollar shortages. So based on these sentiments, we've been seeing foreign investors trying to leave the market. And as a result of that, we've also been seeing the CBN also supporting the currency through the sale of USD in the market. On a year-to-date, seeing the CBN selling up to about 3.1 billion USD, and there's still room to do more.
Yeah.
So as with all the negative sentiments in general, we've seen that the exchange rate has now depreciated towards 1600 levels per USD, from around 1500 and 1550 naira per USD before this Liberation Day tariff on the 2nd of April. And also another instance where we are likely going to see an expected negative impact on Nigeria will be that China, countries like China, European Union countries also, given that there is an expected slowdown in their domestic demand, you are also then likely going to see them also reducing demand for Nigeria's export produce. So this also has a negative implication on growth. So in essence, from a direct impact point of view, we're expecting that these tariffs is having a negligible impact on the Nigerian economy, but indirectly in the form of slowdown in Nigeria's trading partners and countries, and also reduction in crude oil prices. We are then seeing negative impacts, especially with the exchange rates depreciating towards 1620 levels from previously 1500 levels per USD.
So really a sentiment story here. And I guess with, that 90-day pause, there has been perhaps a shift in sentiment. Have we seen, the currency improve?
No, so with the shift in sentiment, before the 90-day pause,
Yeah.
crude oil prices were trading at around 75 dollar per barrel. Then with the shift in sentiments, we saw oil prices even dipping below $60 per barrel. Then after the pause, we saw the oil prices moving from $60 per barrel towards 64, $65 per barrel, but still not back to the $74 per barrel we've been seeing before the tariffs hike. So what we've just seen is that we've seen a slowdown in sell-offs
Yeah.
from offshore investors. So unlike when the tariffs were first of all increased, where we saw significant sell-offs, but with the pause, we saw a slowdown, and that has somewhat supported the exchange rates so far. So before the 90-day pause, the exchange rate traded as high as 1670 per USD. After the 90-day pause, as of today, we are within the band of 1600, 1620 per USD. So we've seen a bit of calmness in the markets, but not really up to where we were before the Liberation Day tariff on the 2nd of April.
Abdulazeez, there's been concern around the renewal of AGOA because it seems like the tariffs that have been coming through somewhat nullify those benefits. Are there concerns on your front and, whether there will be a renewal come September?
So that is still left to be seen, because with AGOA, it increases the access of Nigeria's exports to the United States. So we understand that tariffs were as low as 3% under the AGOA. But the expectation, given how since the beginning of this year down to this moment, we've seen the US president announcing a lot of tariffs, as much as we've been changing clothes also. So we'll be expecting that we'll just be much more positive, that by September there will be few changes in stance also, in such a way that we are still going to see an extension in this AGOA by September. So we are not really leaving much on the table. So in the sense that we are still expecting that things, we are still likely going to see some form of policy pronouncements, and we're just being hopeful that by September and this will be renewed.
And as we don't know what Trump could do next, I mean, you also mentioned there that, these policies are changing just as much as people change their clothes. Are you seeing Nigeria taking advantage of other markets? I mean, I know trade within Africa from Nigeria is also quite strong.
Yes, so as of yesterday, we saw the president gazetting the Nigeria's addition to the African continental free trade zone area, where you will be seeing significant reduction or even no tariffs on about 90% of the entire products being traded under the African continental free trade zone area. So that for us is a shift, showing Nigeria also trying to do more with African countries, opening up access for for Nigerian exporters. Aside that, Nigeria also does a lot with with China and also some European countries. So in 2024, Netherlands and Spain featured as like one of the largest trade partners for Nigeria. So aside the United States, you are seeing Nigeria even doing more with China. With the gazetting of some of these African free trade zone, continental free trade zone agreements, you are also likely going to see Nigeria also doing much more with other African countries.
And, African countries aside, right, it does seem like the U.S. is not as an important market as it seems within Nigeria, because there is other markets that it is exploring and trading with. In terms of, I guess, the response from Nigeria to the trades, have you seen anything take place? I mean, I know they haven't retaliated.
No. We know our place in Nigeria, so we are not really. Nigeria is not really looking, is not really looking to retaliate. We've just seen the economic and management team trying to have some meeting, and so they are still expected to meet sometimes this week to evaluate the likely impact of this tariff on Nigeria. But the preliminary estimate is that on a direct basis, impact is somewhat negligible, but impact is much more and worse on an indirect basis. So what we are seeing from the economic management team is that sometimes this week, and when they meet, they are trying to assess some other opportunities that they can get from all these global uncertainties, and also try as much as possible to limit the impact on the citizens. So that meeting has been taking place sometimes now, and it also is expected to also continue sometimes this week.
Abdulazeez, thanks so much for your time and just sharing those insights. That was Standard Bank's regional economist for West Africa, Abdulazeez Kuranga.